Welcome to Stocks in Translation. I'm your host, Jared Blikre, and with me is the voice of the people, Sydnee Fried. Thank you for tuning in. First, a couple of conversation notes here. Be sure to like, subscribe, and comment on Stocks in Translation on Spotify, Apple Music, YouTube, or wherever you get the podcast. And today we are welcoming back Kenny Glick, the owner of HitTheBid.com. Kenny is a master of technicals, especially VWAP and anchored VWAP. And today's theme is reversals and rocket ships. We're in the midst of the greatest volatility shock recovery on record. And why rocket ships? Kenny's going to tell us, I'm sure. And the phrase of the day is mean reversion, what that means for traders and investors, as well as its opposite, which is a trend. And this episode brought to you by the number 59. That's the percentage of respondents in a new investing survey who said they are likely to use AI to make trading decisions. Exactly who is responding to the AI clarion call? Now let's get down to brass tacks. Kenny, you are a short-term trader. We have had a lot of action this summer, but also recently, VIX sprung a leak and blasted off to 65. The yen carry trade imploded. How are you? Are you capitalizing on this? Are you minting money?
Well, to be honest with you, I was up for about 72 hours when that moment was happening because I'm a short vol trader. So I was looking death in the eye.
Okay.
It was pretty frightening, but I also knew that it's always a temporary moment. So when I was watching the VIX do something, and I hate that word unprecedented when you're just waiting for the market to open up, unprecedented event, I was waiting for UVXY to open up, and that's what I was short. So I had to go out and start battling for my life that Monday, Tuesday, Wednesday. So yeah, it was pretty wild.
Were you fearful? You were excited? Like what went through your head when you saw the VIX make
It was the most frightening moment I've had in 20 years. No joke.
Wow.
Yeah, because I'm a short vol trader. I had what we call naked calls. Not what I do. This was like, it's almost like a side project that went horribly wrong.
So you say naked calls. You were selling them. You were betting that the market would never go to those levels,
Absolutely.
but then it did.
Right. And the thing is, for 12 years, I'm taking people's bets, and they're all losing. So I'm the bookie. And on that night, I had to pay out. And I was on the other side of a 20-to-1 and a 40-to-1 trade. So it kind of hurt.
Did Volmageddon get you? Because that was a big one that hurt a few years ago.
That one was a good one. That one I was on the right side.
Because you were on the right side. But that is was that happenstance? You play both sides, or?
I'm normally a vol shorter. And again, the UVXY is an extension of the VIX. It's kind of the fear index. So it's a leveraged version of the VIX. But you also have to remember that it always reverts. And we're going to talk reversing to the mean. It always reverts. It's guaranteed to revert. So as long as you don't go over your head, which I did, as long as you don't use massive leverage, which I was, you should be able to fight your way through it. I was making phone calls to my family that night.
Wait,
so, yeah.
Kenny, dewonkify this for me a little bit.
Okay.
Like we're talking about the VIX, but not everybody.
Great word,
dewonkify this.
Yeah.
Not everybody that's listening might know what that is. So can you just explain in basic terms what the VIX is and what you do with it?
Okay. Well, the VIX in particular is volatility. So people will buy into the VIX when they think there's something going to happen bad. What it basically tries to talk about is the fear that's built into the market. So most of the time you have a complacent VIX and it's very low, and then it has these massive spikes.
What's low?
Low is about around 12 or 13
Okay.
on the VIX. So we were talking around 38, 48, 40, and it was moving like a 2% move in the VIX is exciting. I think we were at 200% that night.
Easily.
So it was absolutely incredible. And what the UVXY is, it reflects mostly what the VIX is doing and the S&P futures market. So it was just an absolute bloodbath if you were on the wrong side of that. But again, if you weren't over leveraged and you weren't on margin, you could fight through it. And what was a $65 stock is right back to 22 and just 10 days later. And suddenly, where'd all that chaos go? Where's all the fear? It's gone.
You're going to help me segue. You actually already helped me segue into mean reversion here. So let's just get down to it. Mean reversion describes a tendency for an asset price to return back towards its historical average or mean over time. And it contrasts with the term trend, which is a directional move that just persists. So, you got to be able to differentiate between the two environments here. And as you mentioned, the VIX is a mean reverting asset. It goes up. It's almost guaranteed to come down. But the question is how quickly.
Right.
And I'm just wondering, how did you trade out of that hole? Did you start going short again at the highs? Did you try to flip positions? Did you try to trade it long?
Well, at the highs, I was still in fear for my life at that moment. And I also it was really bad timing. The market event unprecedented moment. Me having to, I don't know if I don't want to get into my family life, but I was about to drive to Georgia on a 12-hour journey to bring my girl.
We need that context.
My daughter was driving to Georgia. So I was so distracted. We had just had this massive party at my house. I'm like, this is not what I need right now on a Sunday night, freaking
Mother
out.
market knew.
Right. So, you know, and again, in the back of my mind, I'm like, it'll be mean reversion. Don't worry, you'll be able to fight through it. But there's a point where you're like, oh my God, what if it doesn't revert within these 3 or 4 days while I'm sitting here? And of course, the main reversion was while I was driving on the road, and you know, I just wanted to pull over and start crying for a second, because when the UVXY collapses, it really doesn't have a value other than those brief moments of time, and then it's actually built to go down. If you read the prospectus, it's 128 pages of telling you not to own it long term.
I love that you read the UVXY prospectus. It's something that you're laughing, and we tell people, you know, you need to read the prospectus.
Yeah.
Not everybody has the ability to get through hundreds of pages of the gobbledygook that, you know, the SEC requires, but like you found a use for it.
Well, I just summed it up. It's 128 pages. It says, don't own this long term.
Well, now the audience has read it too.
Did you read it, or did you put it into Chat GPT?
I keep it. I actually use it as they send, every time you trade it, they send you another copy. So I actually use it instead of like Duraflame logs. I just crumple it up and put it into my fireplace.
Yeah, perfect. Coffee table book too.
Exactly.
All right, another use for prospectuses here.
I have a question. Is mean reverting a bad thing? Like, usually, like if I were to think that something is going down, I would think that doesn't sound good. That's bad. But if it's going back towards like a historical average, isn't that kind of just like pricing in what it's really supposed to be?
Ooh, you're right on the cusp.
Am I on it?
You're right on the cusp.
Am I getting it right?
You're right on the cusp of VWAP, right?
Oh, no, I thought I'd never hear that
I don't know if
again.
it's VWAP or VWAP. I know. I'm going WAP. I'm sticking with the WAP.
I got to go with the WAP, but get into it there.
Right.
Yeah.
Well, that is basically your main price that things want to revert to during the day. And then again, my godfather of Brian Shannon with multiple time frame VWAP, you're going to see that mean reversion over extended period of time as well. But as the day trader, if you have something that's shooting down, a lot of times you could expect it to then revert back to the mean. And what is the most important price of the day? It's the VWAP price. So again, you were right there. You were skating
right there,
right on the cusp,
so close.
Just like most traders. You're right there.
So close to understanding.
Yes.
I want to ask you about Pinduoduo. This is a position that you've got your eye on, and how are you playing it? Because China seems to operate on its own fundamentals, which can be good because it's not necessarily tied to what the U.S. is doing. But what's happening in Pinduoduo now that catches your eye?
Well, PDD, again, I'm not a fan of the Chinese stocks. Again, I come from the world of the boiler room, so I've seen every scam and awful stock. Most stocks out of China, you don't even know if these are real companies.
There's questions about the auditors, and the Chinese government can come in and say, we don't like you, and then it's kind of over for the capital markets in that company.
Absolutely. But that's what separates us from normal people, the day trader. All we know is PDD, that's it. So it's just back to the price action. And this stock was absolutely cratering on earnings. So then you just go back and look at some of the historical prices. And what people get wrong is that they just see a stock that's down big and they think it's going to revert to the mean just because that's what happens. Not this time. This time there was nobody buying the stock. But historically, there was some support around $97. And again, looking at the VWAP at the time was way, way above where we were thinking about buying it. But that's your idea. So if you can buy something that was 130, 140 just a couple of days ago, now you're sitting here on a 6-month low. The reversion to the VWAP would have been an amazing trade, but it all starts with that dip buying mentality. And again, as a scalper, as a day trader, you're just looking for that advantage. So if a stock breaks 100, you could probably look to see it go to 97.50. That's kind of what happens, these 2.5-point increments. So when it got down to 97.50, we were just like, okay. So other people's disaster is our opportunity. Let's take advantage around the 97 area. And it did bounce back to about 100 and change, and that's your day's pay, as we call it in the biz.
How much of this is actually open to interpretation, even as you look at the numbers? Is the story hidden beneath the numbers? Are you guessing at all?
I think technicals are everything. You know, I think you could see a stock doing something technically, and then coincidentally the news hits. So now we're playing the event afterwards. So the event has happened. They've already announced how awful these earnings were and whatever else they had to say. Now you're back just with the math. And again, when you're only looking at math, then it's simply risk reward. This is where I'm willing to take. This is the risk I'm going to take, and this is where I think the stock's going to go.
Right.
And that's what's great about it. It takes the story out of the equation. It's just a catalyst. The stories are always a catalyst. That's why I love earnings season, because that's when you have the biggest catalyst and you have these disasters. That's when you have these monstrous moves, and then the reversion to the mean comes into play all the time.
And I guess this is you're talking about a lot of stuff for the day trader, not really for the long-term investor.
Well, when we live, I say we live in the nucleus of the stock. So from here, the price action that you witness today you can take that to the next level. If it holds today's lows or today's action will give you a very, very specific VWAP in the future. So you could take this earnings season and then 3 months later see where we are from that point. So again, this major event really you could take it from the day and turn it into a week, month, or a year.
So this sounds like my dating life. So in other words, you take something that it might be a short-term thing, and then it just ends up a long-term thing.
And then it's gone.
Oh,
wow.
Jared, I love that.
All right. Well, yeah, this would be a great time for a break, which we're going to do right now. But coming up, we're going to be digging into retail investing trends, including AI adoption and who wore it better for the true stars of the galaxy. We are back, and this episode brought to you by the number 59. That is a percentage of respondents in a new trading survey who said they're likely to use AI in their trading decisions. The study was commissioned in the UK, but I will ask you, Kenny, how much would you ever trust AI as part of your tool set, and then would you ever cede any decision-making to it?
I'm still going to make the decider. I'm the decider. I decide.
I get that.
Right. So, but the AI, we are sort of using it already because algorithms are using AI.
Good point.
And we're focusing on the technical trading, and there's AI doing that trading already. So in theory, we are AI traders.
It's your competition.
And I actually might be a robot. I'm not too sure if I'm here or not. But this AI it's not going anywhere. So again, I think there are going to be more quant firms, more technical traders, and there are going to be just specific robot firms. You will hear the first robot firm.
Be some D.E. Shaw offshoot.
Absolutely.
Yeah.
And it's just like you're going to be investing. But the only thing is, is it going to turn into Skynet? Or are they going to be friendly robots? We don't know. And they might just want to ruin you.
They might not just hit the VWAP all day. They might trick you.
That's right.
Let it go
they
through.
Might fool you to fund their nefarious ways.
Right.
We don't know yet.
To me, AI seems fantastic maybe for people that don't know that much about the stock market. You put an article in or something and say, summarize this, or an analyst note or whatever, but I'm a little skeptical of like you said, an AI making a decision. Do you think there would be a big market for people to go to an AI-run firm or hedge fund? I don't know how that would work.
Absolutely. The one thing I've learned in this business, nobody wants to think.
Very true.
People want it. They want it to be handed to you. So if you're telling you, here, I've got this robot that's going to actually serve you food and give you good stock picks, they're going to be in. They're definitely going to be in. It's going to be huge.
You think that they're going to be able to actually tell you which stock to invest in?
I think it's happening already.
Absolutely. And where I thought you were going with that conversation is that if you type in some of your ideas, it'll come up with ideas about, let's say, all right, I'm into robots and microphones and space exploration. Thanks, Kenny. I'll tell you about a few companies that are into robot space and microphones, and that it'll give you the idea and even write a paper about it. So
that's intriguing.
I'll tell you what I've done. I actually did this the other night. I put in a research paper and some stats about Tesla, and I said, give me a bull thesis on this. And it did. It printed out this very in-depth report that I'd asked for. And then I said, give me a bear thesis. And it was equally convincing.
Right.
It's very good at playing both sides, but at the end of the day, you got to make a decision. And right now, I don't think AI is in the position, the way ChatGPT is put into place right now, but I see it evolving there because there's some kinks to work out, but I think it will get to that place where it can make an informed decision. And like anything else in AI, you get in what you get out what you kind of put in, and you put in a lot of effort, you get a lot of good stuff, and if you don't, you don't.
Equally scared and excited, I guess, I suppose. So Kenny, you operate a trading room. Kind of tell us about your experience, trends you're noticing apart from AI. What are you kind of seeing out there right now?
Well, right now it's AI, but for us it's the chips. Again, the NVIDIA story has been beaten to death, but it's not going anywhere. So what we've started to notice is that space, rockets, robots, and how the chips are influencing your space rockets and robots. So, robots in space, space robots, all that stuff. So what I've, again, since I've been trading, that you find where the trend is or the story, again, whatever it was, years ago when semiconductors, there was something called superconductors. And like I said, the market is fatty, and then it just, those fads go away, and every once in a while, one stock sticks around. But right now, space, there's a company called ASTS, right? And the idea, again, I could be right or could be wrong about the story. I'm always last to read about what they exactly do, but they're putting satellites up there to make sure everybody has the internet, and it's fantastic. And once that stock, it got from 5 to 750 to 10 to 1250, the actual price of the stock attracts more people. When a stock is sitting there at $5, it's a $5 stock, nobody cares. But when you see it start to gain traction, next thing you know, it's 20, 30, and starts to, consolidate up there. What do we have here? And then you've got these robots. I don't know if you've ever been to these campuses where you actually call in to get a food delivery, and a little tiny robot brings it to you. And there's a company out there that's doing that. I believe that's what Serve is all about, SERV. And then if you've ever been on a cruise, there's those robot arms that pour your drink for you. Again, I needed it quicker. All right, robot. I can pour my own vodka. This is robot arms are putting the drinks together. So again, the AI being powered by the chips, going in rockets in space, and it's just a great moment right now in the stock market. And I don't know if that's going to fade too soon, but what happens is the weirdest stocks will just emerge. They'll just name the company, we love robots, or we love space, and everybody will jump on it. Meanwhile, they have no business model whatsoever. You still got to be careful when these fads become.
I remember 3D printing. So let me ask you, because we're talking about all this new stuff, and these technologies operate in hype cycles. So there's lessons that we can learn about the past. I'm just wondering how the lessons of risk management just kind of stay constant throughout all of this, or hopefully stay somewhat constant as you're evaluating all these new opportunities.
Oh, risk management is exactly where it's all what it's all about. So again, as much as what did you say? What cycle? Hype cycle.
Hype cycle, yeah. The
like
S-curve, the Gartman hype cycle.
I like that. So when the hype cycle is over and the top tier will stay top tier, and usually the mid will start to fade. It's all about price. It always comes back down to price. So if you've got this lovely stock and it's doing all these fantastic things for you, and next thing you know, it breaks that magic price where you believe it's going to go lower, story's over.
It should be, but a lot of times you're invested in this stock, and you've made a lot of money. You want to hold on to it, but you don't want to miss the next opportunity.
Right.
How do you stick with the discipline?
Well, again, price.
Yeah.
Price. So that always influences what I do. And again, when I'm surprised, like a stock like ASTS, normally when you see a stock go from 5 to 10 to 15 to 20, as a bearish, I'm bearish minded. I like to short these stocks, but when they don't cooperate and they tell you cannot short this one, we're not going down right now, you just join the winning team and then go find the one that is rolling over.
It is impressive that you make money as, I'm not going to call you a perma-bear, but bearish, cynical aspirations.
Right.
Something like that.
Trust, no, you have to earn my trust.
All right. We want to segue now. It's time for Who Wore It Better. So take your protein pills and strap your helmet on. Guess what? We are blasting off in search of investing opportunities. I told you that happened.
I love it.
In the final frontier, space. Because as I am fond of saying, the total addressable market, or TAM, of space is infinity, right? In theory. And Kenny, I know you've got your eye on some of the companies. You've talked about them already. AST, that's Space Mobile. We also have Service Titan, which is Serve. Rocket Lab, RKLB, Rolls-Royce Holdings, which, as you've told me, is different than the Rolls-Royce engine maker.
Right.
Lunar. So tell us, where is the opportunity?
Well, right now, the opportunity, again, I hate to beat the dead horse. I love trading. Again, some of these stocks have impressed me to the point where I want to put some money to work. And what's great about it is that the more popular the stock becomes, they put out options. So now you can limit your risk. So ASTS, that's interesting enough where I could put some money to work and have exactly, I'm like, okay, if I think the stock's going to go to 50, maybe have these wild dreams of it going to 100, I could position myself there. If it happens, fantastic. If it doesn't, limited risk. So as far as I'm concerned, I'm just looking at these same stocks and waiting to see this consolidation. Whichever stays strong, they're probably going to make another leg up, and the ones that consolidate and break down, we'll probably never hear from them again.
We don't see Virgin Galactic on this list we have here. What are your
Richard Branson.
thoughts?
Billionaires rocket blasting themselves into space, right?
He looked like he was having a good time when he went to space. I'll give him that.
I got to tell you, I had a long history with that stock. That was when SPACs were
Yes.
were
That was maybe peak SPAC.
that was number one SPAC.
Oh.
Yeah.
Wow, so-
that was like beginning SPAC. That was when
Setting the
SPACs,
precedent.
That was when people were like, what is a SPAC?
First ever SPAC?
Setting
it was
two big
it was the
precedents
first SPAC that I was involved in.
Wait, tell our viewers what a SPAC is in case they don't know.
It's a special acquisition. I don't even know what a SPAC is. Something like that. Yeah.
Special purpose acquisition
There
vehicle.
you
Here we go. Let me ask
Company.
ChatGPT.
Right. I don't know. It starts at $10. They try to sucker you into the stock, and next thing you know, it either goes to 30 or 40.
We're going to put a different definition on
or
screen,
to
but I
zero.
like that.
Yeah.
Oh, $10 is real. I did a whole explainer video on it once.
Yeah, the $10 par value.
Yes.
Right. And you just don't know. And it was all the rage. And now you don't. Now it's like you're a pariah if you even mention the word. But yeah, space was that got caught up. Then it became the SPAC into the meme. So space never had a chance.
Yeah, it was a meme stock too.
Right.
Crazy.
Right. And then it just went absolutely, blasted off for,
Thank you.
for pardon the pun. And next thing you know, it went right back to zero and now has done a reverse split. That company
That's
is
a bad
absolutely
sign.
worthless. Yeah.
If you're not comfortable investing directly in these stocks, do you think just a space ETF is a good play right now if you're more of a beginner?
There is a space ETF, right?
Yeah.
Yeah. I
should
think
do
that it is.
Should you do it?
I like it.
Okay,
I
you
do
like
like
it.
it. You get
You
some
like
Boeing in there also. You'll have
Yeah.
some big guys in there. It's not just your speculative plays. You'll have some solid core holdings. But again, do your own due diligence.
And my follow to you there is we've talked a lot. We talked about chips. We're talking about space. Is tech just generally a safe place to be right now for people? Like we haven't really discussed much else in terms
How do you define
of way of
safe?
sectors.
Well, right now, I again, as the bear in the room most of the time, we just had this massive event. And the idea is that it frightens people and people wait for the next shoe to drop. So while they're waiting for the next shoe to drop, what have we done? We've rallied every day since the drawdown. And again, I think some of this might be pre-programmed. Again, I sit in front of screens for 25 years. I'm a little twitchy. But when you're getting an unprecedented VIX attack, the market's falling off the cliff, but yet the QQQ goes to 420 to the penny, holds it, and that's where the rally begins. Come on now.
Elon Musk might be behind
Come on
it.
now. This is all being controlled by some AI quant firm in space that's using rockets. So
Fair.
it is absolutely incredible. But the environment right now, because we've had such this massive bounce and the volatility has come crashing down, it's setting us up for that complacency already. So we've gone from boom to bust to boom again, and now we're going into September and October, which is notoriously a weak time, and you'll get some
Prime crash time.
Yeah, you'll have extended some more volatility. So we go right back to that UVXY. If it starts to show us some strength again, you could expect some more volatility in the market. But I don't feel safe actually right now. I'm that guy. I'm waiting for the other shoe to drop, especially because we have rallied. Not only did we make it all back, we made it all back and then some. But this market it's not bearish. It's not a bear market by any means, but I'm expecting some more volatility.
We got to leave it there. Believe it or not, 24 minutes has elapsed. And be sure to check out all our other episodes of Stocks in Translation on the Yahoo Finance site and mobile app. We're also on all your favorite podcast platforms. That would be YouTube, Apple, Spotify, iHeart, Podtail, Pod Paradise, and more. Thanks for joining us. And thank you, Kenny.
Thanks
and
for having
Sid.
me.